Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to another episode of the Wall Street Lab podcast. Today we have a really fun and story-driven episode for you. We had the pleasure to speak with Markus Koch. He is a reporter from the New York Stock Exchange for over 20 years now. He started out at a small mutual fund, then went to Bear Stearns and soon realized he wanted to go into media. So he started his own media company and for the last 20 years is reporting from the New York Stock Exchange. Over this time period, as you can imagine, he has a lot of stories that he collected over the years. He was involved in many TV productions surrounding personal finance, investing, and trading. And he shares with us all his learnings, all his stories about the inside of Wall Street and the New York Stock Exchange. If you like the podcast, please give us a 5-star review on iTunes or wherever you got your podcast from. And now, without further ado, our episode with Markus Koch. Hi, Markus. It's such a pleasure to have you here.
Well, thank you for having me here.
Can you tell us what brought you into finance as a start-off to people getting to know you?
So it started very early. I was about 16 and the German savings banks, die Sparkassen, they had these Planspielbörse, which is kind of like a stock market game for kids. And that was my first time I dealt with the stock market. And I loved it. I thought it was so exciting, different all the time, different scenarios. And it was about the future. Nobody knows what happens in the future. We can only guess. And, back in those days with my first account at the Raiffeisenbank Schlüchtern, Bumfuck, Germany, small town.
Super small bank.
Town, And that's where I started trading. And I found my passion and I'm very thankful for that. To this day, and I'm 48 now, every morning I get up, I get excited about what I do. And I think it's a real gift that I found this passion for my job.
I love that you're passionate about finance. I think not so many people are, especially in the broader sense. And then you started trading with 18. What did you do afterwards?
So at the beginning, I think that some of the stocks I bought were pretty nightmarish. Prima Vulcan, North Data, all these, none of them exist anymore. And I discovered in my early years that it was much better investing other people's money. So I invested my teacher's money. My Latin teacher was one of my early clients. And I hated Latin, just to be frank. And not that I lost her money because of that, but unfortunately, my stock investments didn't do so well for her. Might have been one of the reasons I got a bad grading in Latin. Yeah, it was an interesting lesson for me because very early on, the news started reporting about me. Handelsblatt published the first story about me when I was 16. From Brötchen zur Börse, from bread to the stock market, because I was basically making some money on the side, working for a bakery in town. And the guy that owned the bakery invested. And that's how I started out. And very early on, I was managing, it was about $2 million or something like that, which was pretty nice. But I think it was too fast. I thought I was great, fantastic, untouchable. I started trading on margin debt. That was a pretty bad idea. And the whole thing went bust. So I was sitting there with about 17, 18. I was like, oh shit, now how do I pay this back? And I paid back every penny of it. But it was a very important lesson for me. And I'm very thankful actually that this happened early on in my years, because I guess if I would have not learned this lesson back then, maybe it would have not been a couple 10 grand. It was, I think, $70,000 or $80,000 or something like that in margin debt. Maybe today would be 700,000. So it was an early lesson to not basically gamble and to stay grounded and to stay humble. I think these are all the things and the great lessons that the stock market really teaches you. Overconfidence breeds incompetence. I love that sentence. And that's really what motivates me to this day about the market. I'm fascinated about finance because for me, finance is not just about numbers. Finance for me is everything about psychology. What does money do with us? What do we do with money? And all this many psychological aspects of it. And, overconfidence breeds incompetence, I think, is to this day an important lesson for me.
Absolutely. And is incompetence why you chose to then educate people about finance and became a journalist. I think you became a journalist quite early on, and then you started to report on the stock exchange.
Well, it was a bit of a wacky career in my early days, right? Because I had those margin debt. I had to repay the margin debt. And just when I started doing that, the German Bundeswehr knocked on my door, the German army. And back then, as you probably remember, everybody had to go to the Wehrdienst. We had to go join the military. So I was like, how do I repay my margin debt? So I pretty much packed up my bags and moved out of Germany. A friend of mine gave me $5,000 and it's like, just go on whatever you want to do. And I flew to New York and I started out in New York, going from door to door, thinking that I speak perfect English and that I would fulfill my dreams of working on Wall Street. And my options and futures test I already did in Germany at a German brokerage house. So there was a sort of foundation, but not really. So I started out in a mail room at a mutual fund company.
The typical mail room to riches.
It's really funny. In this case, it was actually true. And I was so broke in my early days in New York City that I actually slept in my boss's office on the couch, Heiko. And, of course, he knows this now. But back in the day, I was first in the office and the last in the office.
He is so committed. How does he do that?
I was so committed. And, rents in New York are pretty high. So I slept on my boss's couch. And eventually, years later, he opened up a drawer and he goes like, what are all these clothes doing here? Well, they were my clothes from back in the day. And we're still really good friends and had many laughs about that. I moved on, thanks to him, to Bear Stearns. Worked at the trading desk at Bear Stearns in Midtown and then switched sides to journalism. So the reason I switched, there are many reasons. First of all, we're talking about the early 90s. You have to remember that even CNBC did not start reporting from the floor of the New York Stock Exchange until April of 1996. NTV started 3 months later, and that was me. So the idea of a stock market reporter was not that established back then on Wall Street, especially at the New York Stock Exchange. And especially being a German correspondent, you're always the type of journalist that would do the stock market would be, journalists that cover just general economic topics. And of course, it was the biggest bull market we've seen in many decades. So the timing was perfect. I started with Radio Europa, doing stock market reports for them. Then I started with Classic Radio. And then I decided in 94 to set up my company. And the rest is history. I built up the company. I sold a quarter to the company to Handelsblatt in 2000. Bought it back after the tech bubble burst and have been developing it ever since. And now to finally get to your question. So the reason I focus on education is because to me, Wall Street and especially the New York Stock Exchange reminds me a bit of a telenovela. And tune in tomorrow to find out what happens next. Finance is exciting because there are many stories to be told. Entrepreneurs that have ideas, entrepreneurs that fail, ideas that succeed, ideas that interrupt Tesla, or in the end 90s, all these internet companies that came into existence and then eventually went bust. The Bitcoin boom that came and went. That's the story that excites me. And to me, even though the machines have taken over large parts of trading, I would think about 98% of trading at the New York Stock Exchange at this point is done through machines. The human aspect of it and the actors within Wall Street are people, and people are not rational. Most of the time, at least, they're not rational. And that's the stories I like to tell. And I think that's also a very different angle that I take compared to many other media outlets. I think it's a mistake talking to retail investors out of the perspective of, the all-knowing expert, the guy in the dark suit on the stage. How do we see our CEOs mainly at the annual meeting? They look very different than most people. It's almost a different universe. Well, how are you going to connect to retail investors if you appear being so different? And I see a great opportunity in connecting both levels with each other, taking the expert and showing the human side of him. What is it like to manage 200 billion? Klaus Kaldemorgen back in the day at DWS. How do you deal with that? Those are questions that everybody cares about. Or if you look at the CEO of T-Mobile in the US, Jean Leger, I love this guy. He is a guy that really knows how to connect with the audience, with his clients, with the investment media. Everything he does, he breathes, is his company. And he's likable. You want to be like him. You get inspired by somebody like that. And this is how you connect to people. And especially in finance. Look, I mean, it's like you have to be a cynic to be in finance, right? I think when it comes to edutainment or education, if you make people laugh, you make them listen. And that also works in finance.
I love it. It's inspiring to connect retail investor to the CEO, but why? Isn't there enough professional capital out there to finance the CEOs? And why do you try to encourage retail investors?
Because they are part of it. We are part of the economic system. Everybody is. Even the CEO is. And I think it's important to connect the general public with what happens in the economy. How do they associate what happens in the economy? The simple fact that, especially in Germany, where you have so few retail investors to begin with, for them to realize that the companies that they're proud about, whose products they're using, whose products they're buying, most of them are financed through the professional investors, through the stock market, through the bond market. And there is a connection. And the connection is not this big enigma that you have to be afraid of. And I think it's important to take fear out of the whole idea of money, and especially in Germany. I mean, I get the impression, living in the United States now since the early 90s, that Germany is becoming an increasingly fear-driven society. You know, climate change is the picture of fear. The wealthy living on the expense of the middle class. That's a story of fear. But if you paint a story of fear, that's the end of innovation. That's the end of change. Because if you fear something, then there's no motivation to actually do anything, to change anything. And it's important that you paint a picture of opportunity. Climate change is an incredible opportunity. ESG, investing, is an incredible opportunity. And no matter if you like or dislike finance, when money moves, you can change the world quite a bit. And the fact that a third of the professionally managed funds globally are already ESG oriented promotes the idea of the environment. So we're all part of it. And finance is not as evil as many people look at it. And, you know, I kind of enjoy that many people, especially retail investors, look at, not even retail investors, consumers, many consumers, I think, look at finance as being evil. But that's a bunch of bullshit. I know very few people in finance that get out in the morning and tell themselves, how can I fuck over the general public today and make some money? That's just not the way it works. And as a storyteller, and that's how I see myself, my God, I mean, how much better can it get? There are so many stories of drama, of opportunity, of soap operas that I can tell in finance.
It reminds me a bit of the Coca-Cola advertisement, without wanting to do any advertisements myself, but I remember this advertisement that there's like 50,000 bad news every day, but also every day they upload 50 million amazing, funny videos on YouTube. So this kind of resembles, but everybody checks only the bad side of things, but not focuses on the good side.
Well, I mean, you just look at the YouTube channels in Germany, right? The finance-oriented YouTube channels. So you have the ones that paint a picture of gloom and doom. And of course, they have the highest click rates. Dirk Müller, Mr. Dax, or Weiken Friedrich. And now you have Markus Krall. And yeah, I mean, it's like when you have a headline, it's like, we're all going to die. And we're going to get you too. And the euro will fail. And the European Union will collapse. And we will never be able to repay the debt. And the end is near. Fuck, I want to know how I'm going to die. So let's have a look at it, you know? And we have such a strong imagination. You know that psychologically that the loss of $1,000 creates the double amount of pain that profit of $1,000 generates. So of course it's the negative headline that draws people in. And the sad thing is that they will eventually be right. Yes, we will get a crash again. It's a question of time. Yeah? Maybe not next week, maybe in a year, maybe in 5 years, God knows. But it's a natural cycle of finance that we have bear markets. They're not evil. Winter isn't evil because it's cold. It's just winter. I mean, what can I do, you know? So broken clock goes right twice a day, and eventually the doomsayers will be right. I guess they're on the winning side of it, but I'm not a big fan of all these gloom and doom painters.
Just recently read there's nearly $1 billion in German savings, not investments. In the US, over the last 20 years, investment participation of retail investors is at an all-time low. And I feel like people should get educated again, because at the moment with inflation, you get negative interest rates basically on your money. And even if the stock market goes down, There was a statistic you probably know it as well. If you missed the 5 or 10 best days of the last cycle, you've lost 50, 60% of your profits. And I think that makes it important for everybody to get educated about investments and to do this via stories.
Absolutely. Marriage is a lot more risky than the stock market, right? The average marriage ends after 12 years and it can be very expensive. To me, the financial crisis was a joke because it was basically my divorce was a year earlier. Now I'm remarried, very happy. But man, the financial crisis after the divorce was a piece of cake for me. That was the upside of the divorce. So you have a German DAX portfolio after 12 years, you never lost money. Maybe I should have done that instead. I do both. I hedge myself. But the whole thing with education, it takes two people to tango, right? The person that is willing to educate and then the person that is willing to listen. And I think that's the tricky part. The reason why in the United States shareholdership is much higher than here, leaving the cultural aspect aside, this living the American dream and being part of the next big thing, that's the cultural side of it. But I think a lot of surveys that show that American retail investors are even dumber than the German retail investor. So I don't think that's it. I think that there has to be political support for the idea of investing in the stock market. And the entire system in the US, if I look at my pension plans, my 401k plans, my IRA plans, there are so many great tax opportunities to invest in the market. And hell yeah, I'm going to do this every year. Deadline is the 15th of October. I just put in more money yesterday, and I trade my retirement account and I have a lot of fun doing that. But in other words, if there's not the political commitment to supporting the idea of stock market investing, the public will not go for it. When I look at what's happening in Germany and the idea that Olaf Scholz, our genius Secretary of Finance, suggesting that you will not be able to offset your losses with your gains anymore, that's just ludicrous. What is this guy smoking, for Christ's sake? This is Germany. This is one of the most powerful economies in the world. And our Secretary of Finance doesn't get that? When I read headlines of him saying that he's warning the bank bosses about passing on negative interest rates, is he aware of the fact that it's actually not Deutsche Bank that is setting negative interest rates? It's actually the European Central Bank. And by the way, Draghi for many, many years has pointed out that it might be a good idea for Berlin to stimulate the economy with fiscal policy instead of putting it all on the ECB. And yes, good morning. Now we find out negative interest rates are actually counterproductive because savings rates are up. What is this guy doing in Berlin? I'm really in disbelief when I see what kind of policies are being done out of Berlin in regards to finance. And yes, again, education is great, but if there's no political support about the idea that being the owner in a stock-listed company is actually a good thing, but giving the impression to the public that if you become an owner of a company, that's dangerous. Of course, that's not going to work.
Looking at your list of things that you've done so many TV shows, videos. Can you tell us what were the key takeaways that you learned from doing all those shows? What would young professionals, students, what is the key takeaway that they might learn either for their career in finance or maybe for themselves? Because I feel like I'm pretty clueless about finance myself, even though I studied it for a long time.
Aren't we all clueless about finance to a certain degree, right? If you look at what's happening in the repo market right now, I have not yet met one professional that can really explain to me why this is happening. They're trying to figure it out, but they don't have quite the answer. We're dealing with the future, and the future is unknown. And what you see in future is your own decision. And I think the key takeaway for me is that having fear is quite normal. But if you don't analyze and quantify the fear and act accordingly, then it will overwhelm you and you will make mistakes. There's a big difference between fear and danger. And other than that, the most productions we did, and I was part of the production with Paul Allens, who's passed away recently, the Microsoft co-founder, produced a series called We the Economy, which was also fantastic because we basically took a bunch of Hollywood film directors and locked them in a room with economists, which is in itself almost an art form because you have to make sure that film directors that usually look at the stock market investing as something like, it must be something crooked going on over there, but it was a very well-balanced result. And I think it was also an eye-opening experience for many of the film directors because they experienced finance through a total new and different way. And I think experts have to move away from, usually the industry, the financial industry always takes a top-down approach. I, the expert, have to explain to the little guy how it works. But why don't you flip the sides? And why don't you look at the bottom-up approach? How do people actually get in contact with money? How do they experience it? What are the connections between everyday life and finance? And that's really what most of my productions are about. What does Casanova and Romeo have together with bond investing and the stock market? You know, one wanted all, the other one only wanted one. The desire for safety and the desire for something new, for adventure. And you have to find a healthy balance between both. If you're too much driven by adventure in investing, you'll fail. And if you're too security driven, you will fail too, because you will miss out on opportunities. Why do we play lotto but don't invest in the stock market? Why do we join fitness clubs in January but end up not going anymore after 3 months? Great business model for fitness clubs. So there's so many examples that connect us from our daily life experience to the stock market. Those are the stories that I'm telling.
I know that you made this TV production called Moby Dick and Fishing, and it's about fear. A recent guest on the podcast told us about the old man and the sea. And spoiler alert, the old man follows this huge tuna for days. He wrestles down the tuna, he catches it, and by the time he goes back to land, sharks have eaten the entire tuna. And he goes back with nothing. He's nearly dead. And the lesson that the trader that recommended the book said was like, well, you have to cut your losses in time. Otherwise, you will fail. I would like to have your opinion on what is Moby Dick telling about fear and about finance.
Well, the sailors made the big mistake not going to the closest location because they feared that cannibals were living there. So they opted for the much longer path and ended up becoming cannibals themselves. And that's the certain irony behind it. And I think that transports very well in the idea of fear and danger, right? Fear is a decision in your head. You have to quantify fear into the real danger and invest accordingly. That's, I think, a mistake, by the way, that a lot of journalists do in Germany is this question, can you still invest in stocks? Is it too late? Well, the question is, how much are you investing in stocks? The question is not if you should invest in stocks. So if you just have the feeling that there's something wrong out there, and there are a lot of things wrong out there these days, just look at the madman in Washington. I have to report about this guy every day. Surprisingly, I still have hair, even though it turned gray in the last 4 years. But nevertheless, if you don't quantify the fear, but you have the feeling that there's something off out there, then you will not act in right terms. But if you know what this fear actually means in regards to danger, then investing based on fear might actually work for you. If you know that if the worst case happens, and you have 30% of your money invested in the stock market and it goes down 50%, well, then you might not have to change your lifestyle because you're only losing very little percentage of your entire assets. I mean, it's not like you buy a life insurance because you think you're going to friggin' die tomorrow. You buy it to be prepared for the case. So you're going to sit in an airplane and you look at the stewardess putting the swim vest on. It's not because we're going to crash, hopefully. But you have to know how to act if a moment of crisis comes. And I think very few people really prepare for that. So for me, I invest a lot more based on risk than on opportunity. Because if I know my risk, I can let the opportunity run. And what I love about trading is you cannot blame anybody else for that. You're responsible for it. It's the box ring that you're entering, you against the market. And you have to know when to throw punches, and you have to know also when to withdraw. And it is your money at risk, and it is your decision that you made to be in there. And sometimes the market is right and you're wrong, and that too you have to realize and withdraw. And I love the idea that trading, you gain a certain distance to what money really is. So for me, to limit my losses doesn't have any emotional impact. I might be pissed because who likes losing money? But I'll sit there and analyze what actually happened. Was I right? Was I wrong? What did I misread? How do I avoid this mistake in the future? But I don't go home thinking about how much money I lost and that I could have, bought a car with it or whatever. So I think you gain a very healthy distance to what money is about. Of course, you have to be careful not to lose the idea of value, right? I know quite a few traders from the New York Stock Exchange or brokers that used to be on the trading floor in the 90s. They made a killing in the 90s. If you didn't make a lot of money in the 80s and 90s at the New York Stock Exchange on the trading floor, you're an idiot. I mean, everybody made money back in those days. But the problem is if you make $1 million and you spend $2 million, then $1 million is really not a lot of money. So I think because a lot of those guys traded many, many $1 million a day, you kind of lost the touch with reality. If you trade $20, $40 million a day, then your paycheck, even though it is $1 million a year, might feel to you as being rather small. So you have to be careful not to lose touch with reality. But other than that, I love the fact that trading brings out the best and the worst in everybody. And so many great lessons to learn. One of the things I've learned when I came to New York, the first thing I started doing is take jazz lessons. I play jazz piano is my other passion. And it is such a great way to understand American culture. It's one of the few cultural exports of the United States, other than whatever, Santa Claus red clothes, thanks to Coca-Cola. But here we are again, Coca-Cola, You should get paid for this.
I'll reach out to see if they sponsor.
You should, yeah. But what does jazz teach you about American culture? Miles Davis used to say there are no mistakes in jazz. Improvisation, you still have to know the rules of engagement, how to improvise. But the immense freedom you get in taking it wherever you want to take it, and the idea that the listener wants and expects of you to deliver something new every single time you start improvising. Wow, that's fantastic, And you're dealing with the unknown because you don't know where you might take it. And that to me is a lot like the stock market. We're talking about the future again, that is unknown. You have to improvise. You cannot hold on to your opinion because you think you're right. You actually have to change your opinion if you're wrong or if the market has a different idea of where to take it. It has a lot to do with the art of improvisation to a certain degree. Again, you have to know the game, the rules of the game, but you have to take the liberty and the freedom to change your mind and just go with the flow.
You started a quote that I can find on your website. It's like, learn the rules like a pro so you can break them like an artist. Yeah. I love the quote, by the way.
Picasso.
Yeah.
Yes, it's one of my favorite quotes.
You wouldn't have an idea like how Picasso related to the stock market. Exact same thing, right? If you know the rules of the game, you can set your own rules and you can break them, but knowingly. There's a great book by Daniel Kahneman, Thinking Fast and Slow. That
behavioral finance, yeah.
Exactly. How all those... You don't want to fall prey when you're trading to your heuristics, but you want to consciously get over them and break them consciously.
Absolutely. And here you bring two great examples that there is an incredible connection between many aspects of life and investing. Miles Davis, what did he do about investing? Picasso. But if you look at those quotes and what they're talking about and what they did in their lives and with their lives, all that connects into this whole universe of finance and economics. And that is what makes it exciting to me. Not reading the balance sheet and finding the debt level and the EBITDA earnings. Yeah, of course it's important. But the story is so rich when you dive into finance. And, you can probably tell, I get really excited about all of this, What great times do we live in to experience all this immense level of bullshit we have to deal with right now, right? You have a madman, it's like Star Wars, you have Darth Vader, Donald Trump, then you have Yoda, Chi, then you have Boris Johnson. Boris Johnson to me is Chewbacca, a bit of a wild man. Nobody quite gets what he's talking about, and then you have Princess Leia popping up, asking for an impeachment inquiry, Pelosi of the Democrats. And now you have Elizabeth Warren in the running. I mean, those are stories that influence the markets, right? And All of this we have to take into account. We went through every emotion in regards to Trump on Wall Street. We first ignored him. Then we celebrated him with his tax reform. Then we feared him. And now we kind of hate him to a certain degree, all this tweeting bullshit that he's coming up with. And that really influences the market on a day-to-day level. JP Morgan has their own indicator now for the Trump tweets. 81 tweets a day on really big days. That's almost an art form. That's every 20 minutes, one tweet. When does this dude work, for Christ's sake? I mean, it's pretty amazing. But no matter what you think of it, that too is a fun part. It doesn't matter if I like Trump or not. Yeah. As a European living in America, married to an American, father of a 7-year-old child, I will never support Trump as a person. But I have to look at him as an economic factor and as an influencer of Wall Street and what it means in my business universe. And that's a total different way of looking at him. And that too is fun, that you have to be able to differentiate, really dig in and see what moves in markets.
Yeah, you have some really good points in there. I want to talk about two things. The first, I heard this quote, I can't really pinpoint it down perfectly, but the politics has a very short shadow in the market. Mm-hmm. Do you think that changed over the years? And on the topic of change, did your reporting on the New York Stock Exchange change? Did the trading or the reporting or the exchange itself change over the years, and how?
Wow, I hope you're ready for a long answer. So yes, of course. I mean, the increase in geopolitical risk is reflected in the stock market, mainly also, of course, through the economic consequence of it. There are certain rules that are undebatably true. I mean, everybody knows, everybody should know, even Trump should know, that trade wars are bad. George Bush Jr. lived through it as well in small terms. And the end result is not a good one. So the geopolitical turmoil that we are witnessing mainly in the Western world influences us on many levels. And of course, also in stock market reporting. I feel really sorry for large investors. I mean, how do you navigate this? You have one tweet saying that we'll get a deal. It's almost like two songs we've been singing. It's like, it kind of cracks me up because so first for month and month, we sang this song. I don't know the English version of it. It's like, Morgen, Kinder, wird's was geben. This Christmas song that tomorrow, kids, you're going to get a gift. And Trump played this really well. Tomorrow we'll have a deal. Tomorrow it might happen, and investors push the markets higher and higher. We'll get there. And it will be Christmas. And then we ended up singing, what a difference a day makes. More tariffs and the total opposite of it. It's like an absolute madman in action. And I think the irony in many ways is that in regards to China, I think a lot of people agree that it is important that China changes the IP aspect of China, the intellectual properties, is an important aspect. The idea of going after China, I think, is in its core not a bad idea. And many people might disagree with me, but I do think that the only way of doing this, not through multilateral agreements, because it's too complex and Europe doesn't really have a China strategy, But the idea of creating this one big deal from the beginning on was a stupid idea. It's going to end up being many little deals. Many little steps that need to be taken. And now Trump is running out of time. I think my personal opinion is that he would keep a certain level of tariffs in place until after the election, because almost 80% of Americans believe it's a good idea to go after China. Even if he rolls back a bit and he'll make it sound like a wonderful deal that he's working on, that's one thing that cracks me up. People tell me like, if it's not a great deal, it's like, then what have we gained? But his voters are not reading the Wall Street Journal. They're not watching CNBC. They might not even watch Fox Business. They might tweet. Who knows? Yeah. So he'll make it sound like the greatest deal ever if he doesn't get impeached. I don't think he will, by the way. So in any case, I mean, to go back to your questions, and, we can talk about this endlessly, but yes, geopolitical risk is influencing us on every level on Wall Street.
How did the markets change in the side? So we now know politics changed. How did the markets change? The thing is, you talk so much about stories, and then you also said there's 98% traded electronically. Are you making the stories out of the remaining 2% that humans are involved, or how are they still stories?
So first of all, even if you have 98% of machines doing the trading, behind those machines are still people, right? I mean, whose money are they trading? People's money. And I actually think that the need of storytelling increases with machines taking over, robo-advisors taking over, because we have to tell the story of finance, but we have to tell the story of finance differently than in the past. I think the days where you tune in CNBC and you have all these talking heads. One says, oh, we'll go up. The other one will say, we'll go down. Who cares? I don't even know what track record these guys have. You have 80 strategists on CNBC during a day. Where's the value in that? There is no value in that. So I think that I like to listen to them to get certain ideas and maybe new aspects and maybe personal where I can dig in and get more details. But by the end of the day, I think buy and sell recommendations, all the stuff that the financial media often talks about, is becoming increasingly irrelevant. But that makes the story and connecting the average consumer and retail investor to the world of finance even more important. And you have to tell the stories differently. It's no longer about IBM going up $5 and the oil price going down $3. How much does it matter anyway? We have ETFs taking over the world. So the meaning of individual stocks is going down anyway. You have tokenization coming in the next wave. So the way we look at investing will change dramatically. And looking at the New York Stock Exchange, the only thing at the New York Stock Exchange that is still the way it used to be is the facade. Other than that, everything has changed. Everything. And that's great. I mean, that's the fun stuff about finance. It's about making money. And because it is about making money, everybody tries to be there first, cutting edge. The idea of data becoming increasingly structured and connecting it to machine learning, deep learning, artificial intelligence. A lot of that stuff is way beyond my own knowledge. But being able to pick the brains of these people and trying to be part of it, working at the New York Stock Exchange for over 20 years now on the floor has always been about change. Because if you do not change, you will not survive. And you can look at this as a downside. I always looked at this as an opportunity because you want to keep at it. You want to throw your punches. You want to adapt to the market environment, meet interesting people, pick brains, and evolve. And I'm glad that I experienced the old days on the trading floor and the new days, and they're very different. We used to have the craziest traditions on the trading floor. We used to have the stomping of the shoes, the powdering of the shoes. I think it was Ronald Reagan when he was still a governor. He was at the New York Stock Exchange, and somebody put baby powder on his shoes, and he started stomping his shoes. And back then, there were 5,000 people on the floor. Everybody on the floor started stomping their feet. And that's a tradition that kept on going for years, So if you start on the floor as a broker, you're a newbie, somebody will try and put baby powder on your shoes while you're trading. And if all the other guys see it, they start stomping their feet. Of course, now we're not 5,000 people anymore. I would think it's maybe 600 or 700 people. So the effect is not there anymore. But there is no place like the floor. That's a saying in New York, and there's a lot of truth to it. We used to throw boiled rice on the floor because, back then we used to write tickets in paper, throw them on the floor. And of course, if you would walk through wet rice, all these tickets would be sticking to your shoes. Or if somebody had a horrible hangover, we would pin the wheel covers, those aluminum things. We would tie them on a little rope and pin it to somebody's trading jacket. They had a horrible hangover. Or before the long weekends at 3 o'clock, 33 minutes and 33 seconds, the entire trading floor will scream, whoop, whoop, whoop. We still do this to this day, And every year, I think it's either Christmas or Thanksgiving, we all sing the old Hoover song, Wait Till the Sun Shines, Nelly, an old Depression song as a reminder of the bad times and that they shall not repeat again. So the NYSE used to be an incredible place of camaraderie, of competition, and of honor. If you had a badge on the floor and you were part of those guys, you were part of a very, very special community. People that also stood in for each other. I think there were more shares traded in the luncheon club of the New York Stock Exchange than during trading hours on the floor. And we had great stories. I remember a time when there was a broker that had a heart attack and passed away. And his wife had a house with a huge mortgage. And the entire trading floor paid off the house, gave her tons of money, to have a good life after her husband passed away. And that's the kind of place the floor used to be. The level of camaraderie was unheard of. We built actually a school in Bolivia with the rock band of the New York Stock Exchange. We would do tours, collect money. And the school is still around. We have 800 kids in Bolivia, in Cochabamba. I'm really honored and very, very happy that I experienced those times, because those were really the times where you felt what trading was about. When you stood in the crowd, there were breaking news and you would listen in the crowd. Were they quiet? Were they loud? Are there buyers? Are there sellers? Reading the tape, as we used to say. Those times are over, but I'm glad I experienced it. And I'm as glad as being in there right now, because now I'm dealing with rocket scientists, with physicists, with all kinds of IT people. And that's a whole new universe that opens up. And that too I get to experience. So how much better does it get?
Those sounds like really, really exciting times and really exciting experiences, stories as you have them. I think it would be, on the one side, it distances probably the brokers from the retail investors. On the other side, things like the school in Bolivia make them feel closer.
You know, it's funny because I always felt, and I did a book about that many years ago, about 10 years ago, that people look at Wall Street or at the symbol of Wall Street, and there's a certain notion people have about it. You know, it's all about money. It's all about profit. Nobody cares about anything but money. And that's really not true. People care about a lot more than just making money. And the NYSE, the New York Stock Exchange, back then was such a great example of it. You know, the barber in the basement who was playing opera all day long, and the nurses on the 8th floor, they were all part of the family. We all took care of each other. And that's what it was all about. It was a lot about honor and respecting that having a badge meant something. You couldn't just join the luncheon club. You had to be voted into the luncheon club from those guys. I tell you one funny story. So there are very few female traders, brokers at the New York Stock Exchange. And one of the first women on the trading floor was Muriel Siebert. She has since passed away. I think 1976, she was starting on the floor. She had her first batch, but she was not allowed to be part of the luncheon club because the men on the floor just didn't want to have a woman in there. So eventually they gave in and they allowed her to become a member in the luncheon club. But there was no ladies' room. So the ladies' room was not built until 1982. And what they did, and that is so typical of those guys at the NYSE back then, we had phone booths at the luncheon club. I think it was about 10 phone booths. And they turned phone booth number 5 into the ladies' room. But they made sure that the phone was still in there just to bother them and go in and do phone calls if need be.
That's like the typical stories you read about in the books and that you read. One interesting topic you touched on there. Do you see more women becoming traders? And also, what would you maybe give tips to young women and young people in general that want to become traders and want to be involved in the stock market?
Well, I mean, the question is, what does a trader actually look like these days, right? I mean, the traditional trader, I think, used to be a very different animal, right? Those were in regards to the New York Stock Exchange, they were the guys from the Bronx, from Queens, from Staten Island, Irish, Italian background that were loud and pushy, and those were the guys on the floor. But they're gone, of course. And the new era is a very different type of investor. And I think that today, if you don't have a quant background, you don't have any opportunity really in trading left. And machines will increasingly take over. I mean, the wave in artificial intelligence, I think, coming the next 5 or 10 years, just looking at the sheer amount of money that Wall Street invests into development of technology, just shows you how much the world will change. And of course, today, women are an important part of Wall Street, and the integration has become a priority. You know, interestingly, again, it takes two to tango. I don't really quite get also with events. It's 90% guys sitting in front of me, even at retail events. Now, there's been a huge movement in Germany with all kinds of investors meetings focused on women. And I think that's a good thing in many ways. But most of the time, you know, again, it takes two to tango. The question is, are there opportunities for women? And undoubtedly, yes, there are. But is there also the interest on the side of women going into that? And those are two aspects to keep in mind. It takes two, the supply and the demand, and both seem to be a bit out of sync.
Do you have anything else that you want to leave our audience with? Any last words, any last advice?
Don't focus on what makes you successful. Focus on what makes you happy. That is the essence of everything. The biggest gift to me is the fact that I live a passion. And I think when you enter a career, you will encounter many situations where you have to ask yourself, how much are you willing to bend yourself to succeed? Stay true to yourself. And I think that's the most important thing, because that is the one thing that people cannot take away from you. They can take your money away, but your dignity and that look into the mirror, people cannot take away from you. And I think with all, especially entering a career, especially rising through the ranks, you will encounter many situations where you have to make a decision. Stay true to yourself, focus on your happiness. And I think that's really what drives success.
I couldn't have wished for any better words to wrap this up. Markus, thank you so much for coming on the podcast. And I'm really looking forward to hearing more from you.
Thank you very much, Andreas. Tons of fun. Thank you.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
The information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. Any copying, distribution, or reproduction of this podcast without the permission of the creators of the podcast is strictly prohibited.